Australian dollar extends losses on dovish RBA message despite rate hike. Skip to main content. Pipe. Get the app. Pipe. Newsletter. FX Street. FX Street, the Forex market. Newsletter. Semicolon. Australian dollar extends losses on dovish RBA message despite rate hike. News, the 11th of July 2023, 9 hours 34 minutes and 36 seconds Greenwich Mean Time, by Akhtar Faruqi. Australian dollar extends losses amid a 25 bits per second interest rate hike by the RBA. Australia's central bank lifted OCR from 4.10% to 4.35% after holding interest rate for 4 consecutive meetings. China's trade balance reduced to $56.53 billion against the market consensus of $81.95 billion in October. The Australian dollar, AUD, continues to decline despite a 25 basis points interest rate hike by the Reserve Bank of Australia, RBA, on Tuesday. The AUD-USD pair also faced losses as a result of the positive performance of US Treasury yields, aiding the US dollar, USD, in bouncing back from its 2-month low. Australia's central bank has recommenced policy tightening, raising the official cash rate, OCR, from 4.10% to 4.35% after keeping the benchmark interest rate steady for 4 consecutive meetings. The RBA's decision to take this step could be a reaction to the recent Consumer Price Index, CPI, data, which showed a third-quarter increase surpassing market consensus. Additionally, Australia's seasonally adjusted retail sales, MUM, for September exceeded expectations. The RBA has indicated reduced confidence in the necessity for additional hikes and is now adopting a data-dependent approach, waiting for more significant upside inflation before considering further increases. While there is skepticism that upcoming data will prompt additional RBA rate hikes, the central bank's apprehension about persistent inflation risks might discourage premature rate cuts next year. China's trade balance data for October revealed a decrease in the surplus balance against the market expectations of an improvement. While exports, YoY, experienced a more significant decline, surpassing the expected decrease and exceeding the previous decline. US dollar index, DXY, recovers from its 7-week low due to improved US Treasury yields. The 10-year US Treasury yield has bounced back from the 6-week low noted last Friday. Moreover, Minneapolis Federal Reserve Bank President Neel Kashkari, in a Monday interview with the Wall Street Journal, conveyed a cautious approach to monetary policy. President Kashkari leans towards being overly cautious, expressing a preference for over-tightening rather than risking not doing enough to bring inflation in line with the central bank's 2% target. Daily Digest market movers, Australian dollar faces challenges despite the interest rate hike by RBA. RBA has resumed policy tightening, raising the official cash rate, OCR, from 4.10% to 4.35% after maintaining the benchmark interest rate unchanged for 4 consecutive meetings. Australia's TD securities inflation, YoY, reduced to 5.1% in September from 5.7% prior. Australia's retail sales improved to 0.2% in the third quarter from the previous reading of -0.6%. Aussie trade balance, month-on-month, decreased to 6,786 M in September, falling short of expectations set at 9,400 M and down from the previous figure of 10,161 M. In the 12 months leading up to September 2023, Australia's monthly Consumer Price Index, CPI, recorded a 5.6% increase. However, the quarterly inflation rate dipped to 5.4% year-on-year in Q3. China's trade balance data for October revealed a decrease in the surplus balance at $56.53 billion against the market expectations of an improvement to $81.95 billion from the previous readings of $77.71 billion. While exports, YoY, experienced a more significant decline of 6.4%, more than the expected decline of 3.1%. US Bureau of Labor Statistics recently unveiled the non-farm payrolls, NFP, data for October, disclosing a figure of 150K. This missed the expected 180K and marked a substantial drop from September's 297K. US average hourly earnings, month-on-month, saw a decline to 0.2%, deviating from the anticipated 0.3%. On a year-over-year basis, it came in at 4.1%, surpassing the 4.0% expectations. US ISM Services Purchasing Managers Index, PMI, declined from the previous 53.6 to 51.8. Additionally, on Thursday, the U.S. Department of Labor released the count of initial claims for unemployment benefits for the week ending October 27, showing an increase from 212,000 to 217,000. Technical analysis, Australian dollar breaks below the major support at 0.6450 level. The Australian dollar trades lower around the major support at the 0.6450 level, followed by the 14-day exponential moving average, EMA, at 0.6406, lined up with the psychological level at 0.6400. On the upside, the 38.2% Fibonacci retracement level at 0.6508 could act as the immediate resistance, followed by September's high at 0.6521. AUD, USD, daily chart. Australian dollar price today. The table below shows the percentage change of Australian dollar, AUD, against listed major currencies today. Australian dollar was the weakest against the US dollar. The heat map shows percentage changes of major currencies against each other. The base currency is picked from the left column, while the quote currency is picked from the top row. For example, if you pick the euro from the left column and move along the horizontal line to the Japanese yen, the percentage change displayed in the box will represent EUR, base, JPY, quote. Australian dollar facts. What key factors drive the Australian dollar? One of the most significant factors for the Australian dollar, AUD, is the level of interest rates set by the Reserve Bank of Australia, RBA. Because Australia is a resource-rich country, another key driver is the price of its biggest export, iron ore. The health of the Chinese economy, its largest trading partner, is a factor, as well as inflation in Australia, its growth rate and trade balance. Market sentiment, whether investors are taking on more risky assets, risk on, or seeking safe havens, risk off, is also a factor, with risk on positive for AUD. How do the decisions of the Reserve Bank of Australia impact the Australian dollar? The Reserve Bank of Australia, RBA, influences the Australian dollar, AUD, by setting the level of interest rates that Australian banks can lend to each other. This influences the level of interest rates in the economy as a whole. The main goal of the RBA is to maintain a stable inflation rate of 2 to 3% by adjusting interest rates up or down. Relatively high interest rates compared to other major central banks support the AUD, and the opposite for relatively low. The RBA can also use quantitative easing and tightening to influence credit conditions, with the former AUD negative and the latter AUD positive. How does the health of the Chinese economy impact the Australian dollar? China is Australia's largest trading partner, so the health of the Chinese economy is a major influence on the value of the Australian dollar, AUD. When the Chinese economy is doing well, it purchases more raw materials, goods and services from Australia, lifting demand for the AUD, and pushing up its value. The opposite is the case when the Chinese economy is not growing as fast as expected. Positive or negative surprises in Chinese growth data, therefore, often have a direct impact on the Australian dollar and its pairs. How does the price of iron ore impact the Australian dollar? Iron ore is Australia's largest export, accounting for $118 billion a year according to data from 2021, with China as its primary destination. The price of iron ore, therefore, can be a driver of the Australian dollar. Generally, if the price of iron ore rises, AUD also goes up, as aggregate demand for the currency increases. The opposite is the case if the price of iron ore falls. Higher iron ore prices also tend to result in a greater likelihood of a positive trade balance for Australia, which is also positive of the AUD. How does the trade balance impact the Australian dollar? The trade balance, which is the difference between what a country earns from its exports versus what it pays for its imports, is another factor that can influence the value of the Australian dollar. If Australia produces highly sought-after exports, then its currency will gain in value purely from the surplus demand created from foreign buyers seeking to purchase its exports versus what it spends to purchase imports. Therefore, a positive net trade balance strengthens the AUD, with the opposite effect if the trade balance is negative. Information on these pages contains forward-looking statements that involve risks and uncertainties. Markets and instruments profiled on this page are for informational purposes only and should not in any way come across as a recommendation to buy or sell in these assets. You should do your own thorough research before making any investment decisions. FX Street does not in any way guarantee that this information is free from mistakes, errors, or material misstatements. It also does not guarantee that this information is of a timely nature. Investing in open markets involves a great deal of risk, including the loss of all or a portion of your investment, as well as emotional distress. All risks, losses and costs associated with investing, including total loss of principal, are your responsibility. The views and opinions expressed in this article are those of the authors and do not necessarily reflect the official policy or position of FX Street nor its advertisers. The author will not be held responsible for information that is found at the end of links posted on this page. If not otherwise explicitly mentioned in the body of the article, at the time of writing, the author has no position in any stock mentioned in this article and no business relationship with any company mentioned. The author has not received compensation for writing this article, other than from FX Street. FX Street and the author do not provide personalized recommendations. The author makes no representations as to the accuracy, completeness, or suitability of this information. FX Street and the author will not be liable for any errors, omissions or any losses, injuries or damages arising from this information and its display or use. Errors and omissions accepted. The author and FX Street are not registered investment advisors and nothing in this article is intended to be investment advice. Follow us on Telegram. Stay updated of all the news. Join Telegram. Recommended content. Follow us on Telegram. Stay updated of all the news. Join Telegram. Recommended content. Editor's picks. EUR, USD drops below 1.0700 as USD recovery continues. EUR/USD extended its daily slide in the European session on Tuesday and declined below 1.0700. The risk-averse market atmosphere helps the US dollar gather strength against its rivals and weighs on the pair as markets await comments from Fed officials. EUR/USD news. GBP/USD falls below 1.2300 as dour mood lifts US dollar. GBP/USD came under renewed bearish pressure and slumped below 1.2300 in the European session on Tuesday. The US dollar recovery is underpinned by broad risk aversion, weighing negatively on the pair. Fed speak remains on tap. GBP/USD news. Gold price falls further as US dollar yields recover ahead of Powell's speech. Gold price drops to a near 2-week low as investors channel funds into the US dollar and bond yields rise. Geopolitical tensions stay more or less unchanged, fading the appeal of gold. Gold news. Nearly 60% of ARB holders are underwater despite 50% rally in Arbitrum price. Why? Arbitrum, ARB, price has shot up 50% since mid-October 2023 and shows signs of exhaustion. While an extension of the upswing is likely, a minor pullback could be around the corner. Read more. Are bonds a good value? Equities and bonds exhibited movements exceeding 2 standard deviations, marking one of the most significant weekly rallies in asset classes in the past 2 decades. Read more. Forex majors. Cryptocurrencies. Signatures. Copyright 2023, FX Street, all rights reserved. About us editorial guidelines, ethical code, corporate identity, consumer advice. FX Street blog. Sitemap. Terms and conditions. Contact us. Advertising. Jobs. Edition Espanol Italiano Bahasa Indonesia Portuguese Reben U Fan T Zhong Wen Jian T Zhong Wen Ruskisch Francais Deutsch Magyar Tuxetieng Viet. Note, all information on this page is subject to change. The use of this website constitutes acceptance of our user agreement. Please read our privacy policy and legal disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Opinions expressed at FX Street are those of the individual authors and do not necessarily represent the opinion of FX Street or its management. FX Street has not verified the accuracy or basis in fact of any claim or statement made by any independent author. Errors and omissions may occur. Any opinions, news, research, analyses, prices or other information contained on this website, by FX Street, its employees, clients or contributors, is provided as general market commentary and does not constitute investment advice. FX Street will not accept liability for any loss or damage, including without limitation to, any loss of profit, which may arise directly or indirectly from use of or reliance on such information. Twitter, Telegram, Facebook, LinkedIn, Instagram, YouTube, Financial Juice.